Jared, in the meantime here, taking a look at these losses, I think investors are certainly very excited to wrap up 2022, look ahead for 2023. But a lot of these projections that we're getting from some of the most well-known analysts on the street are saying things might not improve, at least right away.
No, I don't think so. And a number of headwinds still on the horizon. The war in Ukraine kind of took investors by surprise last year. That could be set to reaccelerate. We got some guests we're going to talk to about the potential for that, but also the other headwinds. We got a Fed meeting coming in at the end of the month here, at the beginning of February. Lots of expectations for that. The Fed expected to dial down its rate hiking bonanza here, but even though it's slowing the pace, it's really not even anything close to a pivot. So I've seen some analysts expecting a recession in the first quarter, the second quarter of the year. Goldman Sachs doesn't think there's going to be a recession. In other words, they think there's going to be a soft landing. But let's go to the Wi-Fi Interactive for a second here and just check in on some of the leaders that we're seeing here. One of the things I noticed was, first of all, in terms of volatility, the last 3 days have all seen more than 1% moves in the S&P 500. That's not supposed to happen, Seana, at the end of the year. They were supposed to have low volatility. We're not supposed to think about the markets, but you take a look at the selling that we've seen over the last 5 days in this heat map right here. At the very bottom, solar energy, which I consider kind of a fringe investment. That is, it's not, it's more of the speculative, more of the high beta investment. That has taken the biggest hit here, followed by meme stocks, biotech. ARK is the disruptive force. MJ is cannabis. So a lot of these fringe sectors, money getting sucked out, not the best risk on mood. So again, going to be interesting to see how we begin the new year.
Yeah, it certainly will be. And of course, when you take into account everything that has happened over the last 12 months with stocks and bonds both down simultaneously, I think a lot of that bad news will likely stay with us, like you're saying, just in terms of the Fed projections, what we could potentially see for volatility, at least in the first half of the year. Because when you take a look at those economic trends, certainly we are seeing signs of the economy weakening. The big question, though, is if we will get a recession, and then, of course, how deep that recession could potentially be.
Exactly.